everything and run. There will be blood in the streets for the next few years. Yep, it's going to be bloody all over the place. It's a gigantic dumpster fire, and it's not really what the Fed is doing. It's not really what this guy's doing, even though these are terrible stories, right? Look, ready's for that. I don't like saying those dirty words on the tubes. They get me in trouble. And also, I'll go over the rate hike. I'll also go over how stupid the Fed is, and I'll explain it, because you're not going to get what I am going to show you in the regular media. I will break it down for you in this video, and then I will explain the stock market and how all this ties in and what's going to happen. Hey, look at that. Look at this. You guys say doom and gloom. Look at this. Paris prepares for civil conflict, right? 5,000 of those guys that carry those things. This is bad stuff. I mean, Putin is over there, 70-year-old Putin sitting there. And he's like, what should I do? Should I push the button? Oh, yeah, let's end this life on a high note. I mean, you don't even need to go to those prepper channels. I could just summarize it in under 30 seconds. Make sure you have a bunker. But hey, you guys, remember Ron? Yeah, well, he has some tough words for you. And I really like Ron Paul. He's just like that grandpa. Would you say grandpa? The nice one, not like the creepy one. Nouriel Roubini. So this is on Ron Paul's side, former advisor to the IMF, International Monetary Fund, president of Clinton's Council, economic advisors, Main Street. Like, this guy knows what he's talking about. And Roubini blames what? The creation of a debt-based economy at or near zero interest rates, which I will go over. Money is debt. Well, in the system that has been created for you and I. I know. Gold, silver, Bitcoin. But 99% of what the system says is money, and what you and I work off of, bonds, or you use your card, that's debt. Bonds, debt. You take out a loan, debt. A house, debt. Card debt. Everything debt. It works until it doesn't, and you're starting to feel the effects of it doesn't, and you're going to see things like this. The crisis will lead to social unrest and violence. Yep. But I'll basically summarize the article for you. The monetary system that you live in, mathematically, it cannot work. I mean, you're already at $250 that you have to pay back in taxes. And that's not $2.50. That would be $250,000. And the Fed has to pay it back. They're like insolvent now. Oh, and what I mean by insolvent, and I know a lot of you guys are like, oh, the Fed could go burr. The Fed doesn't go burr. I mean, if you know anyone who works at the Fed that really understands how this whole system works, the Fed don't go burr. Money is created by a loan. Yes, the Fed has Chuck E. Cheese tokens and they swap and it stays within the system. But right now, they have to pay back all of those bonds with interest. And they're broke. Look, see line over here? They're broke and they're going more broker. Also, this sentence up here, this could get really confusing. Liabilities, you know what liabilities are. Capital, you know what that is. Liabilities, earning remittances, right, due to the U.S. Treasury because they got to pay Janet. They also call it deferred assets. They use all these trickery words. Basically, they cut themselves a check, or they cut a check, and they're like, okay, Janet, don't cash this until in the future because we know we're going to make a whole lot of money, just not yet. And everyone thinks Jerome, the Fed, the central banks are God. They're not God, you guys. They have a little bit of control right here. And the bond market, the worldwide bond market, is telling the Fed you're wrong. And the bond market is umpteen times bigger. And I've been telling you guys, lock in that 1 year. Call your bank and say, like, especially if you have a lot of money. I got it at 4.75. We're at 4.6. The yields are dropping. But I will show you in another chart of how it all works so you understand it. Like I'm teaching high school, so you'll get it. Now, if you only have a little bit of money, like let's say 10,000 or 20,000, it's 10 per person in the family. Do a Series I, well, not financial advice. If they BK, it all goes. It's almost at 7%. But if you read the fine print, that's down here. Here it is, 10 grand. There it is, 10 grand per person. But now back to the bond yield. So it's just so you can understand. The 30-year yield above my head is at 3%, okay? That's screaming, well, disinflation. I mean, the long end is 3%. The short end is almost 5%. So the entire world is telling you it's bad. okay? And looking over out that side, see this line? So everyone's rushing to the bonds like, oh, provide us safety. Well, except for the short end here. That's where the Fed gets control over the little short end. But the rest of the world says, nope, it's all coming down. This side is going to go underneath that side. These are your trillion-dollar players. This is where most of the money is. It makes the stock market look like a little baby. And Jerome and the Fed, they're idiots. I think it's just like a control game. They're like, look at all this power that we speak, but they don't. And you want to know what's going to happen? Let me use this little slider. Let me move it. This is the stock market over here. Let me move the slider and show you what it's going to look like. Do you see that? See that right there? See how low it is on one side and high on the, well, it's not even high. Because the one side is going to be lower. The side that the Fed's like, no, we handle inflation. No, it's not. It's disinflation. It will be very deflationary. Very soon, it's going to look like that. The long end goes above the short end, and the whole world. Now, I rewound it. So this was 2019. See how low it was? Remember, we were pretty low. The stock market crashes, right? And that's what happens. We go into a recession. So for everyone that's like, we're good, or Bitcoin, how did it perform in a recession? I know you only had a couple months on it. People got scared and it went to 3,800. And we have not even seen capitulation yet. We have not seen the blood in the streets yet. But I hope you guys like 0% interest rates, because they are coming. It's going to look not like that. It's going to look more like that, because everyone and their mother is going to run to the bond market for safety. Even though they're only getting 0%, they're like, well, it's safer than that over there. Now, hopefully you guys get it. You understand right now it's going the wrong way. The Fed's, pounding their chest. Oh, we got this. We know how this all works. No, you don't. I mean, even the 2-year yield, that's what the Fed follows for their Fed funds rate. They follow the 2-year, which it came down today. So that means there's a demand, thinking like, oh my gosh, this is going to get really bad. Yeah, it's still, I don't think, do you see the top right there? And it's been falling. But in the end, the Fed is wrong. They're always wrong. The entire bond market is telling the Fed's wrong. And I know the Fed's like, oh, we don't care about the inverted yield curve. It's globally. Like the euro dollar, which is probably 4 times bigger than our dollar, inverted. This is everyone with all the money is saying, we're going down. We're going deflation, disinflation, hold on to your hats, or just use it as depends. And then retail. Oh my gosh, retail is just going to get destroyed because they're like, oh, let's do what the Fed. I don't even think retail even understands. Well, the Fed's going to pivot, and then I want to go all in. And then I've showed you, because you subscribe to this channel, that after that, that's when the market actually dives. Retail tries to front run, and that's just the stock market. The bond market will tell you what the world is going to do. And probably why Michael Wilson, it says ignore CPI and the FOMC, because Wilson sees a bloodbath ahead in this rerun of 2008. And as the article says, it's probably a good thing that Morgan Stanley's Mike Wilson, who called the latest peak in stocks, check, at the start of the month and at the end of the bear market rally, he had correctly predicted earlier in the fall, and now expects, what? A steep drop heading into the first half of 2023. And also, please do not say, you know what, I'll just get into the stock market when it's at the bottom. You probably didn't get into the bond market when I said that's the bottom. That would be TLT. That is a double bottom. So if you want to own the bond market, buy TLT paper trading at $108. I mean, TLT has been telling you it's over. The game is over. The Fed is lost. See you next year. But hot mamas and cool dudes, please learn how to do this. This is actually in my watch list. Do you see this? This is Hood. And actually, I know the CEO of this guy, Vlad. Is he still CEO? We hung out. I came out of a trailer park. It was during a Zoom call. My daughter's like, Dad, really? You're coming out of a double wide here? Or more precisely, it was that Airstream. I think it's cool. I'm like, hey, what's up, Vlad? Can I ask some questions? That didn't go over too well. I said, well, I hope you're I hope your company files for bankruptcy. Yeah, so this one is in it. I said right there. That's where you put in the short. Oh, and if you carry this down, oof, I don't even, do we even look? Oh, and in regards to looking, this was Tuesday, December 13th. Bravo's daily watch list. Every morning, this is currently what I'm trading, EMB. This was yesterday. Hood, I said, oh, hey, look, you got a flagpole, you got a pennant, potential bearish pennant, put in the short. And that was when Hood was at $9.57. Also, if you guys could do me a huge favor, I see a lot. You guys keep buying my watch list, like what I'm trading, but I have a feeling you don't know how to trade, which frightens me so much. Today only, this is it. If you're watching this, anything here, $1.99, which is like the cheapest I've ever ran. Nice hair, Bravo. Oh, so that's what the top looks like. All these, see, all this here, over 65% off. Now we're doing a whole lot more today. So if you're new, because I know a lot of you are, just start with the swing trading one. You'll never beat that price. Just start there, then do the bear market. If you want to test your luck in crypto, knock your socks off. And that way you could learn how to right-click short, right? Was it up here? Somewhere up there. And now you can get back at Vlad for removing the sell button, right? Remember GameStop? Remember all those? You're like, where'd it go? See, this is your opportunity to hit him right in the coin purse. Oh, and along with punching people in the coin purses, you can stop watching this stuff. Just look at the charts. That's it, even though sometimes it's some good stuff. I subscribed CNBC Pro, just like you did you? My channel? Maybe? Help a brother out? You got people like Jeffrey Gunlock. I love saying Gunlatch. One of the biggest investors, which I am not. I mean, I'm a little investor in the world. I'm a trader. I trade. I go in, I get out. I go in, I get out. Issued a dire warning for when? Oh, wait for it. Yeah, that would be in about 3 weeks. Double Line's Jeff Gunlock said Monday during an investor webcast that an economic downturn will arrive in just a few days. And why is that, you ask? Well, I just explained it in this video for you. So you don't even have to look at this. The effects of these rate hikes and the accumulation of quantitative tightening, which no one understands, and the draining of liquidity, which I understand from the bond market, is going to make 2023, in my view, probably a recessionary year. Oh, Jeff, you're being very nice. Actually, he's being so nice that this inverted yield curve, where all the big money is saying the inversion that is happening in the euro dollar and in ours is bigger than we've ever seen before. So if you thought 2008 was bad, well, you got more to come. And also, you can stop looking at this. Look, Dow, oh, it's down today. Why did it go down today? See, people always try to take the fundamentals, like, well, the Fed did this, and that's why the Nasdaq's down, or this and that. Guys, all rates are going to zero. Sorry. It's just the way the debt-based system has been created. And here, I'll show you again. Debt-based system, bond market. Look at the yield on the 30-year. Do you see what it has done since the 70s, right? We've been moving in this direction because the only way to stimulate an economy is you need people to borrow. So that means get out there and buy houses, buy cars, put things on the card, create bonds. Just get this whole debt-based system going. And the only way you're going to do it is you got to bring rates down to 0%, where people are like, okay, I can afford that now. Actually, in this chart, this is like an anomaly that the 30-year got up. But you can see the trend is your friend until the end. We are going down here. And here, let me just chart it real quick. I'm drawing one yellow line. Do you see a deviation there? Yeah. Also, you went into the Lux Algo zone. And if you guys ever want the Lux Algo, link in the description for that, unless I forgot to put it in there. But this is telling you we're going to come right down there. Look at that, 1%. Because that is the only way that this system's going to work, well, until they reset it, which maybe that'll be my tomorrow's video where you own nothing and you are happy, and which is kind of crazy too, because it's kind of right now. And what do I mean by that? Well, they've conditioned you to, I didn't need to own it. I'll just make payments. I wanted to buy a book, but you know what? I could just get it here at this subscription service, or I wanted music, or I wanted a car, or I wanted a house. Well, Bravo, That's unconstitutional. You can actually own a home. Really? There's a thing called property tax. You will never own one. You want to know what is owned? That would be you, my friend. And guess who owns you? That would be the government and banks. Last year, I was actually, when I started looking for a place to buy in Austin, I'm like, no way. The condos, the property tax and the HOA cost more than the monthly payment of the house. And I did mention a car. I'm not talking about, your lease or whatever. I'm talking about, oh, you wanted heated seats? Oh, that's a monthly subscription for that, $18 a month. You too can have heated seats. And how it's going to play out is the 1% is going to own everything. And forever and ever. That's just how it always works. And the people like David here says a recession is coming. And he knows, you know what? You make your money, start business, trade equities. That's how the game is played. Pass it on down. Understand what money is, debt. Tell your kids, here you go. But people that don't understand the system are enslaved by the system, and it's like, get out of debt. No. You use that and you create passive income. You use someone else's debt to generate your debt, and you get to do whatever you want in life and turn it into $1 billion. Says a recession is coming. Tech valuations are set to fall further. And the Fed is going to have to get unemployment to 6% to get inflation down. And I say, well, you know what, billionaire David? The bond market is telling you that inflation is coming down. And you should probably get ready for things like delinquencies and bankruptcies and all these things. Like I said at the beginning of the video, blood in the streets. And the rich, top 5%, then squeeze themselves up into the 1% because you listen to how this is all played. U.S. credit card delinquencies to rise next year, TransUnion says. And not just that, the federal deficit is going to widen because this system isn't designed to go this long. So it's all coming down to a gigantic dumpster fire until the people who created it are like, okay, I give up. But they have their next solution, which is, you already know because you've subscribed and maybe you were nice and you liked the video, or maybe YouTube will push this video to one person. But if they don't, that is okay because you are here watching it. So I've made a difference. And now it is your turn to make a difference. So go make those digits go bigger and start businesses and trade equities. And I'll see you tomorrow.